Well, the Bank of Japan's surprise move overnight pushed the yen lower, and that's a welcome development, at least from the BOJ's point of view. With more on what it means for future yen trade, we bring in Wells Fargo currency strategist Vassili Serebriakov. He is a Bloomberg best overall forecaster for his long-term accuracy. Thank you so much, Vassili, for coming in this morning. We heard from Jim O'Neill saying he thinks the Bank of Japan actually should have done their QE program. That's essentially what it is. Earlier, and he says more should be done in the future. Do you agree with that?
That's probably right. But, you know, we've talked a lot about this currency war, currency battle, but perhaps we should be talking a little bit more about the battle of the central banks. And I think the problem for the Bank of Japan is, and their stance on the Japanese yen is, as long as the U.S. Fed maintains very easy monetary policy or, in fact, implements quantitative easing round 2, there's relatively little that the Bank of Japan can do to offset that in terms of its impact on the yen.
So if we visualize it, it's basically a boxing ring. You have the Federal Reserve on one side, the Bank of Japan on the other, and you're saying the Fed is the heavyweight. It doesn't matter what Japan does. If the U.S. wants the dollar to be weaker, it can do it in a heartbeat.
The Fed is a super heavyweight, I would say, and certainly with the dollar being the global reserve currency, I think once the Fed throws its weight behind further quantitative easing, creating further global liquidity, it's very hard to stop the dollar weakness that has resulted in the past, going back to 2009, and certainly it looks like the story is repeating itself this year again.
So essentially you're saying that as long as the dollar is the global reserve currency, that the Fed wins almost by default?
The Fed probably wins, but let's put it this way. It's not that the Bank of Japan have been ineffective in intervening. We certainly don't know where the yen would have been without an intervention, and they've pretty much managed to stop the currency from appreciating. I just don't think they'll be able to weaken it in the short run.
Vassili, you mentioned intervention. Let's just say, for argument's sake, the yen goes to 82. Do we see the Bank of Japan come in and intervene?
We would certainly see a very high chance of that. They've previously indicated that 82 is somewhat of a line in the sand. 80 yen is a level that for sure we would expect some further intervention from the Bank of Japan. So there's certainly more to come.
All right, now we're talking about these issues as if, you know, the boxing ring, the currency war. I mean, there's a lot of very combative, aggressive language here. Is this going to change the discussion? We have the World Bank meetings, the IMF meetings, the G20, all of these on the calendar. Does this change any of the dialogue at any of those meetings?
Well, as the ECB President Trichet previously described currency issues being very touchy at those international meetings, I think this is probably going to be the case. We certainly see some of those tensions cooling off, but we don't see a grand agreement on currencies in the spirit of the agreements we had in the mid-'80s. Perhaps we're going to see a similar statement to the spring of 2009, where the nations agreed to refrain from competitive devaluation of currencies. Probably something along these lines is likely.
Vassili, thank you very much. Vassili Serebriakov, he is joining us there. Well, he's from Wells Fargo. He's with us right here, as you can see, in the newsroom, and he is a Bloomberg best.